Into ACCA classes. So in this video, we will be learning about the share option. In the previous video, we learned about the uh, transfer of share, and in this video we will be learning about share option. In case you have missed out my previous video, you can still access it from my playlist available on the YouTube, or the link of the same is reflected over your right hand side of your screen. So you can access my previous video. In case you are watching my video for the first time, do not forget to subscribe my channel and share it among your friends. Okay, so again we will be learning a small concept in this video, and we are about the mid of our journey in the employment income chapter. Soon we will complete it, and after once all the concept is get completed, we will be doing the question. Okay, so in the transfer of share, we have talked about that your employer will agree to provide the share immediately as a part of your remuneration. But in share option, in this agreement, employer will promise. Employer will tell employee, you will get the share, but at the some point of time in the future. Okay, so basically, from share option point of view, 3 dates are very important. One is the grant date, exercise date, disposal date. So on grant date means the date on which share option has been agreed, means agreement made between the employer and employee to give the share at the some point in the future. But in the exercise date means the date on which the employee actually exercise his or her right of share option, means they're actually acquiring the share. Means once the employee and employer has decided, okay, I will provide you the 500 shares of our company, suppose. So in that case, that's the when the agreement is made, so-called grant date. But when an employee actually exercise those right to get those share, actually get those share, so-called exercise date. But when the employee disposed of those share after acquiring, then it's a disposal date. So 3 data are very important in the share option. Okay. Now let's learn about the taxation, how the share option are taxed, how it will affect our employment income. Okay. So basically from tax point of view, the share option has been categorized under 2 heads. One is the approved share option, other one is unapproved share option. In the approved share option means, approved share option plan means that plan has been approved by the tax authorities. Okay, means it is basically approved from HMRC, we can say. Okay, and unapproved share option plan means these plans are not as per the rules of HMRC. Okay, so they don't have a tax authority approval, we can also say that, right? So from taxation point of view, we need to learn about the 2 things, approved and unapproved. Okay, so what will be the tax implication in case of the approved plan, and what will be the tax implication in case of unapproved plan? So let's learn about approved share option plan. If the share option is from the approved plan, means as per the rules of HMRC, the following will be the tax consequences. Number 1, on the grant date, the date means when the agreement has been made, no tax is payable when the option is granted to the employee by employer. Okay. So on the exercise date, no tax is assessed when employee exercise the option. Okay, again, employee actually acquired the share, they don't have any tax obligation. But when the employee dispose those share, then they have to pay CGT. Capital gain tax will be applicable, need to be payable on any gain when the shares arising when the shares are actually sold. Okay, and how it is calculated? We simply take the what is the disposal proceeds, so-called selling price, and we will deduct the whatever the amount the employee has been paid to acquire those shares. Basically, it's a price on which share can be purchased by the employee. It is based on the agreement of employee and the employer, and whatever the difference is, it's a taxable gain. Simple, right? This is for the approved share option plan, right? Just a second. Okay, so now let's talk about what will be the tax consequences in case of unapproved share option plan. Okay, so if the share option plan is unapproved, means it is not as per the rules of HMRC. In that case, the following will be the tax consequences. So on grant date, no doubt no tax is payable when the share option is granted, but when exercise date, when employee buy the share, then employment benefit arise. And how it is calculated? The market value of the shares on the exercise date less whatever the amount employee has been paid. Okay, difference of two will be taxed under the employment benefit, right? And once the employment benefit arise, then in that case the employee then income tax consequences also be arise, and NIC also have to be paid. Okay, so income tax rate we have already discussed in our first video of the employment income. And for NIC, same, I haven't discussed this in my previous video. So basically for the NIC, as we know, they are class 1 employer employee NIC, class 1A NIC, right? If the share is of quoted company, in that case it is considered with a cash benefit. Why? Because it is very easily redeemable, because everyone know about the company, public is very confidence, having confidence on those share, right? So if it is a quoted company share, so-called listed company shares, in that case it is considered to be the cash benefit. So both employee as well as employer need to pay NIC, so-called class 1 NIC, right? But if it is a share of unquoted company, unlisted company, private company, right, so it is considered with a non-cash benefit, because the company is not well known by public, and it may take a time to get it redeemed. So that's, from that point of view, it's considered with non-cash benefit, and NIC will be taxed, means that class 1A NIC. Okay, and I think up to this is clear. You must have been remembered regarding the rules of NIC, which we have already talked in the covered in the previous video regarding quoted and concluded shares. Okay, now disposal date. If when employees sell the shares, the rule is same. CGT will arise, and how it will be calculated? Difference between the disposal proceeds, so-called selling price, less market value of the share at the time of the exercise. Okay, so whatever the gain and loss arising, CGT will be taxed on that. Okay. Okay, so there are few unapproved, approved share option plan, and these are frequently tested. I mean to say, straightforwardly, question is based on this topic. Like they will ask you what are the criteria, what will be the tax consequences, what will the CGT implication. So it is very straightforward. I will make a next video for the approved share option plan, and I make sure that I will make it easy for you guys to, so that you can remember the rules. Tax is all about remembering the rules. If you know the rules very well, you can apply it to the any scenario, no doubt. Okay, so stay tuned till date to my channel for more video like this. More video like this, and if it is very useful, please share with a friend who is appearing for the ATX or tax. For tax, I don't think there is no such topic, but it's very useful for the ATX student. So please share with them so that they could also have a benefit. So thank you so much guys for watching. Stay tuned for more videos.